back. You're watching Indian Open right here on Bloomberg Quint Live. A quick glance across Asia will tell you that aside from the SGX Nifty, the rest of Asia is all down and out. Japan, China, Hong Kong, everything's trading under 2% cut for Japan and Hong Kong. SGX Nifty, that's trading 72 points higher right now at 10,902. But let's bring in an important market voice. Andrew Holland, CEO of Avendus Capital Alternate Strategies, is joining us right now on the show. Andrew, thanks very much for taking out the time. This is what the market has been anticipating. It has been finally announced by the finance minister. Indeed, a big positive, but whether it has any long-term positive implications or no, we don't know. But for short-term, at least, it's definitely a shot in the arm.
Yeah, absolutely right. It's a welcome move by the finance minister. Everyone's been asking for this. We've got what we wanted, so we should rejoice in that. But you're correct. We're kind of coming into a very difficult kind of global scenario where global markets are down. So, listen, India, when markets globally were rising, we were the one falling because of our own issues. So we should relatively, I think, do better going forward. If the markets either move down or up globally, I think we'll be an outperformer in the very short term. But, I think we need to hear what the finance minister has to say on the other kind of industries going forward, because what the real signal is that the economy is slowing very quickly. So this will help stem the tide, and then we need to see the economy start to pick up, maybe in 1 quarter's time. So this will give us a respite for them to see how the economy reacts to some of the measures that the government's doing.
While obviously these measures are good enough to arrest the fall that we've been seeing over the last month or so, is it enough to really propel the markets higher back to those record highs?
I think that would take a number of things. I think that would take, one, that, some of the trade war problems are moving away, or the expectations that they will move away, and which in that case you'll have a very slow global economy with lower interest rates, the same in India. But obviously the recovery in the Indian economy could be a little bit quicker than some of the problems that you're seeing or facing in global markets. So I think India would actually do a lot better in that scenario in the kind of medium term. But in the very short term, we do have this extra drive of taking action, whereas at the moment we're the global world just suffering from what President Trump is tweeting.
Yeah, well, the world moves according to the Twitter man. Andrew, just one quick question on this, the FPI surcharge removal. Were you on the sidelines because of this surcharge, and this having been done in the way it has? Because I presume that while it's been done for all equity market linked transactions, business income for AIFs, including the derivative income and a few other things, are still under the purview of the surcharge. But having said that, in the current avatar, does it lead you back to investing if the opportunity presented itself?
Yeah, I mean, so investment and tax are investing in the markets, and tax are different matters. But no, I think we'll see a little bit of how the global economy plays out today in terms of global markets, because there's a lot of insecurity there. I don't see, to be honest, even with the change that foreign portfolio investors are going to rush back to India, given what they're waking up to at the moment. So I'd just be a little bit cautious on there. As regards Category 3 hedge funds, I mean, obviously, for foreign investors, you're charging derivatives as a capital gains tax, and you're not doing it in India. Seems slightly odd to tax your own funds higher than foreign investor funds, but hopefully we'll get around that somehow.
Okay. Andrew, we'll leave it at that. Thanks much for taking the time out and joining us for that quick perspective. Well, that's the view from Andrew Holland of Avendus. Vikas Khemani, founder at Carnelian Capital Advisors, with us on the phone line as well. Vikas, thanks so much for taking this call. Now, there are opposing forces at play, Vikas. The globe is not looking all that positive. Local factors probably give a boost for a day. Can India do well in light of these moves, but weighed down by the global sentiment?
Hi, Neil. I think it's a maybe $1 billion question, and the answer will only be clear in some time. But I think my only view is that whatever happened over the weekend in terms of the measures announced by finance minister actually reinforces the faith of markets, and that they are responsive towards and very, very keen to repair the economic damage which has got done in last couple of quarters. And I think series of measures have been taken. Interest rates have been coming down. So I think structurally this all augurs well for positive for the Indian markets. With regards to global uncertainty of trade wars, it's been on for almost 2.5 years now, and we have seen that around the news flow you see volatility, and it kind of sort of settles down because these kind of adjustments will not settle in a short period of time. It goes on for a long period of time. So my sense is that trade wars, in a way, is not a very harmful, particularly for India, because our share is very limited. Yes, you do run a risk for currency adjustment, but I think I don't see that as a very big disrupting forces as far as India is concerned. So I would believe that once economic fundamentals of India start improving and looking up, markets will start doing well. And I would like to believe that probably we have seen worse behind in India, maybe a little bit here and there, when the some of the global news comes through. But otherwise, I won't be much worried of further deterioration either in the economy and market, because I think there's a lot more action being taken.
So do you see us rescaling the record highs, Vikas, or that's still some time to go, considering that earnings still need to support? And while obviously you may actually see some money coming back onto Indian shores because of what the finance minister has announced, it's not going to be a flood of money that's going to come in a matter of 1 or 2 months.
See, look, I don't think, we are going to see some slush of money immediately coming through. I think whatever finance minister has announced, it will also take time to implement and percolate down through the economy. So all those things, tend to play out over a period of time. What it gives is restores bit of confidence. Of course, a lot of thing lies in the execution, how fast they execute, how effectively they execute, and that will determine the success of that measures. Currently, they have just announced the measures. So, once the credit starts picking up in India, I think, economy also will start kind of recuperating. So, I'm more inclined to be positive and believing that next 2-3 months market should kind of consolidate, bottom out. I see more upside potential, risk-reward perspective. I see over the next 2-3 years market delivering phenomenal returns. Because I think we must not forget that globally, from a commodity prices perspective, interest rate perspective, I think most of things are kind of favoring. Macros are kind of favoring you. Only thing right now, micros are not playing. And we have seen in the past, whenever there's a disconnect, there's a convergence which happens. And macros cannot remain so bad for a long period of time. We already had 4 rate cuts. Oil prices are looking down. So all those things think towards a good upward movement over the next 2-3 years.
Because two-part question. One, if you were not investing thus far, because I know social media was agog, everybody was talking about, including I think you and me, about how the government probably needs to do something. Does this lead you to start looking at investing if there is an opportunity presenting itself? Part 2 of my question is, do autos fit the bill now that there is some measures being taken in a sector which is looking like dwindling down further lower?
So of course, I think automobiles do look interesting. I think we have seen in the past this same cycle has played out at least 4 times since 2002 in automobiles, where there have been degrowth in the number, stocks have been corrected and all. So I think automobiles do look surely interesting, at least from a medium-term perspective. Long-term, one has to evaluate, keeping in mind the disruption risk. But I think that is from a medium to long-term perspective. That is nothing from surely for next 2-3 years perspective, or definitely fits the bill because interest rates are down. Cost of registration has gone down. All those things I think are kind of falling in favor of auto, and I think there are some measures like accelerated depreciation being announced, and so I think automobile players also would be keen to push the inventory out and get back to the growth.
All right, Vikas, great to hear from you. Thank you so very much for joining us this morning with your thoughts.
Pleasure.
All right, let's also take a look at what's been happening, because there are a lot of stocks you need to keep in mind. This morning, our research team is joining by to take us through all of the stocks and news. And then from the analyst meet of Mindtree, what came about, Agam is going to join in with that. But I think, Soumit, we'll start off with you first.
Well, let's start off with Reliance Capital first. Now, the CARE ratings are downgraded their ratings on the long-term bonds, debentures, market-linked debentures and subordinate debt of the company to a rating of CARE BB. Now, they have revised their outlook of the company to stable. So, that's a positive thing that has come out. But the change in rating is due to revision in timelines of divestment, deterioration of its standalone financial performance, increasing leverage and reduction in profitability due to impairment of its. And that's the reason the credit rating agency has downgraded its rating on Reliance Capital. But the company is saying that they are working diligently to ensure timely debt repayments and regular repayments of its all debts. Now, second we have is DHFL. Now, they have defaulted on payment of interest related to NCD and bond worth nearly 11 crore rupees and 51 crore rupees, which were due on August 22nd and August 23rd. Thirdly, Adani Ports will also remain in focus because the company has announced the opening of its buyback that is worth nearly 1,960 crore rupees. So, the buyback will be opening on September 6th and will close on September 20th. Last couple of stocks that would remain in focus, couple of pharma stocks that would remain in focus. Firstly, Ipca Labs. Now, the company says that the US FDA has issued a Form 483 with 3 observations after conducting inspection in its manufacturing facility, which is situated in Silvassa. And this inspection was done from August 19 to August 23rd. And there has been 3 observations that has come in from US FDA. Secondly, Alchem Labs will also remain in focus because US FDA has conducted inspection in 2 of its facility, one in USA, one in Baddi. Now, for the USA facility, the company has received nearly 4 observations, but for the Baddi facility, there has been 0 observation that has come in from the US FDA. Lastly, couple of stocks that would remain in focus because CCI approval has come in. Firstly, CCI approval has come in for acquisition of shares of International Papers by West Coast Paper Mill. Secondly, CCI has also approved acquisition of 51.2% stake of Apollo Munich by HDFC and a subsequent merger of Apollo Munich with HDFC Ergo. So these 2 stocks will also remain in focus and trade today.
All right, thanks very much for that, Soumit. Agam, what came out of the analyst meet from Mindtree?
Well, we do have a new CEO at the helm, Debashish Chatterjee. It was an introductory call. So, well, among the key takeaways, we did say, the suggestion was that business has returned to normalcy. There is a stability which has come back after, of course, the co-founders of the company had walked out, a few weeks ago. Mindtree is not seeing any further delay in deal closures. They're also seeing an encouraging response from the company's top 20 clients. The focus for now will remain on growth and improving margins. And in fact, the management has suggested that there will be a sequential improvement in margins going forward as well. Of course, there were questions with respect to LTI, a possible amalgamation down the line. And that is where the management has not said anything, except for the fact that they may explore collaborations with L&T Infotech, considering the complementary portfolios. And the future is unknown with respect to a possible merger, but Mindtree will certainly for now operate independently of LTI. But on the whole, it was more about making sure that everything is back in control, which should be in focus over the next few quarters.
All right, thanks very much for that, Agam. So hopefully we see some reaction on the price of the stock as well. But Avinash Gorakshakar is joining in right now to take us through his views. Avinash, few sectors that you'd probably see a big reaction to in today's session is going to be autos, it's going to be banking as a pocket, and probably even real estate in anticipation of something getting doled out their way. What would you do in terms of reading into specific stocks from within these sectors which have actually not really performed of late?
My guess is, I think within the automotive sector, I think, passenger car companies and the two-wheeler companies like Bajaj and Hero MotoCorp could possibly see a decent spike considering the kind of indirect benefits given, by the finance minister. Hopefully, we could see some sort of volume pickup, coming in the second quarter. Hopefully, as the festive season is, going to start. Our sense is that, these companies have a great amount of resilience in terms of battling the slowdown compared to, let's say, Tata Motors, which has got a huge debt on its balance sheet. So I would believe that typically Hero MotoCorp, Bajaj Auto and Maruti, I think we could see a decent kind of bounce here. Hopefully the festive season should bring in a little amount of cheer for the volumes.
You would stick to the large cap stocks on the auto space. You wouldn't go for the mid-sized ones or even the auto ancillaries. I think, Neeraj, as of now, I would believe that we need to see sustainable signs of demand coming back, because obviously the relief package has come in. That's definitely, going to make the sentiment positive. But the sustainability of this sentiment would be driven by what kind of earnings numbers and volume growth, the frontline automotive companies record. So I would believe that given a choice, I think it's better to stick to the large caps now. Obviously, once the large caps start showing some positive traction, you will probably see a good amount of traction on the smaller companies, but earnings have to catch up, which probably would be coming first for the large cap players.
Okay. Well, so that's with regards to autos, and remember that pocket will do well. Avinash certainly believes that selectively large cap auto names could do well. Lots more has happened, and we'll talk about that as well. But get in Brijesh, Bhatia, head of research at Dealmoney Securities, with us on the show to talk about the levels that one should watch out for with the market's perspective too. Brijesh, we'll start off maybe about 70-75 points higher today. Would you believe that there could be more in store, or would you be initiating some short positions at those levels?
Yeah, morning, Neeraj. So it will be a roller coaster on Friday. I think this momentum to continue towards 11,000, which is generally markets when there is a nearly 3% deviation from 20 days average, market tends to reverse towards it to 20 days average. And if I look at current levels, it's placed around 10,980, 985 sort of levels, and we have nearly deviated 3% from that and coming back towards those average. I think this momentum might take towards 10,980, 11,000 will play a key psychological level. So I would go via options trade in the morning session to go long on 10,900 CE or probably 10,950 CE, because considering the future stop loss, it's slightly placed at 10,780, which is slightly deep considering the risk reward wise. So I think options would be a slightly low risk considering the momentum play. And 10,900 CE last close was around 75. One can initiate long of 80, 85. It might open around 85 sort of levels. So and take a fresh entry, keeping a target of around 140 on the upside, and I think stop loss can be placed at 45 on the downside, but this momentum might definitely continue towards 11,000 level.
All right, we want to get your views on specific stocks and even the bank nifty, Brijesh, but before that, on to a special segment, Bloomberg Edge, where Yash tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Yash, what's the stock today?
Morning, Devina. So should the market actually go up to 10,900, it would be supported by big moves from the index heavyweights, and that's the reason why we have a buy call on HDFC Bank, when the stochastics indicator that has given a positive crossover and has generated a buy signal. Like we always do, the stochastics indicator, as you know, is a trend following momentum indicator. It helps you identify when a price move is overextended as it measures the current price relative to its highest highs and lowest lows. How do you interpret it? You go long whenever there's a crossover that happens, and overbought is above the mark of 80 and oversold is below the mark of 20. Now coming back to the price chart of HDFC, and on the daily time frame, what we see is the fact that the stochastics, which is in the lower panel, that has given a positive crossover. So the blue line of the stochastics that has crossed above the white line, and that crossover has taken place far deep on the lower panel, which is below the mark of 20 as well. As far as the price action is concerned, we saw the stock come under significant pressure over the last 1.5 months post the election, and it has corrected significantly down to almost from 2,300 to less than 2,000, but the 200-day moving average that is placed at the mark of 2,020, which it managed to close above despite falling down to the levels of 2,000 on an intraday basis on Friday. Moving on to the weekly chart as well, we are seeing that the trend line support has been maintained and respected by HDFC. So this is the weekly chart, and the yellow line is the long-term support zone, but this is the upward trend line, and it did not manage to close below it. In fact, it pulled back from the lows of the week and managed to close above that mark. So from current levels, it looks like there is strength and there's buying coming in. And should the index move higher, HDFC would be one of the names to watch out for.
All right, Yash, thanks very much for that. That is Bloomberg Edge for you. But Brijesh, coming back to your stocks, and before your stocks, even the Nifty Bank, would there be any trade possible on it?
Yeah, definitely, Devin. So if I just the only concern for me was the weekly close ending below the key 27,000 mark, and which is slight concern looking at the momentum over the Nifty. In last session, we have seen Nifty gaining good momentum. Bank Nifty also managed to cross about 27,200, but in the end gave the slight gains and ended below 27,000. So in case in today's momentum, if it gains momentum about 27,100, I would definitely look for long bet, keeping a stop loss slightly below 20,000 levels or maybe 26,980 on this spot. And I think 27,400 is the levels this week Bank Nifty might test on the upside.
Okay. What about specific stocks, Brijesh?
Yeah, I would continue with the auto where you left. If you look at the auto, I think we're getting in a good momentum. And even if you look at the auto sector, it is moving out of its four-column triangle on point and figure. So today's momentum, I think, might see a good upside momentum. So apart from playing on a large cap, I would play with the Apollo Tire on the bet. So this is the one stock in the whole auto or auto ancillaries or maybe a tire space, which has ended at nearly 4 weeks high and outperformance against all the tire space or maybe auto ancillary space. And a good bet on auto, keeping on the risk reward wise, Apollo Tire has been placed at around 165, good long bet, keeping a momentum stop loss of 162 and upside target of 177 can be expected. Second is on the Voltas. Stock is convincingly holding 600 levels, and even if you look at the derivative structure, 600 plays out to be a very, very strong support. Even in the falling markets, stocks managed to go below those levels, but every week it ended above 600 levels, giving a good positive reversal sign. So long bet around 612, keeping a target of 644 on the upside, and stop loss can be placed at 599. Third stock is on the Bata. So stock has been trading at nearly all-time high in the falling markets, and even if you look at the momentum was strongly supported by volumes this time at 52-week high. So at around 1480, one can look a long bet for the target of 1530 to 1550, and stop loss can be placed at 1454.
Thanks for those, Brijesh. Avinash, just very quickly, we have 50 seconds to go for the pre-open session. Which pocket is the key beneficiary out of the Friday's announcements?
No, I think clearly direct beneficiaries which actually benefit the most are, the housing finance companies and the NBFCs, Neeraj, because I think clearly the government has consciously taken a call to announce a window of 20,000 odd crores, and I think within the housing finance bracket we've seen a lot of values getting depleted. So I would believe that here possibly the markets could possibly get a kind of sentiment booster, considering that housing is a core demand and demand has been growing. I think once liquidity comes, you could see obviously the ramp up in the order books coming in.
All right, coming back to you, Avinash. About 10 seconds left to go for market pre-open, and the SGX Nifty has already seen a spike. 81 points now for the SGX Nifty, so 10,910 is what we've got. The market pre-open on your screen, Nifty 50 opens with a big bang move, but this, actually may cool off. So 3.5% is just the first stick. So while you may want to remain optimistic, I don't know whether this will stick. So 11,200 on the index, but individual stocks and the moves thereabouts is something that's going to drive the markets further. Banks, autos, NBFCs, housing finance companies, everything's up. So SBI for one is up about 10%. You've got Tata Motors, which is up 10%. M&M has moved up 10%. Yes Bank is up 10%. HDFC, that one's up 7%. Power Grid is up 9%. So slew of stocks with these big gains. Axis Bank 5.5%, ICICI about 4%. Then you've got HDFC Bank, Indiabulls Housing 4%, Bajaj Finserv, Bajaj Finance, ONGC, Titan. It's like I'll have to name the entire Nifty 50 stocks. Just one stock actually, which is not doing well, is Sun Pharma, and that one's down closer to 1%. So that's what you've got on the index. At least it looks like a big bumper open, and the index is showing you a 2.8% gain right now. The currency, however, has slipped further. So while we were talking about some strength that could come back in the currency, this is more of the global flavor playing out on the currency, which is now at about 72.
Well, let's wait and watch. The move should be rupee positive. Let's wait and watch if indeed that happens over the course of the next few days. PSU banks all seem to be doing well. We'll revisit some of these, but Allahabad, Oriental, Syndicate Bank, UCO Bank, Corporation Bank, almost everything. And some of the housing finance companies that Avinash was speaking about, Repco Home Finance, for example, looks like starting off on a good note. So let's wait and watch if these rates do well. Let them stabilize and then we'll talk more about them. There is pain points, the likes of CG Power, etc., but best left not discussed because frankly, I don't know how many people even own a CG Power. But let's wait and watch. Some of these names could be okay, but otherwise, by and large, the mood is fairly positive. The currency is the important one, as Avinash stated. Quick perspective from Jayesh Mehta, MD and Country Treasurer at Bank of America Merrill Lynch, joins us right now on the phone line. Jayesh, good morning and thanks for speaking to us. What do you make of these measures in light of what's happening to the global currencies and the dollar index, and how do you think the rupee will react in the short term?
So, if you just rewind it back to maybe Friday morning where we didn't have much of a, there was some calm before this new thing emerged out, right? So if you take Friday morning, Thursday morning, I think we thought we are more or less done. 72 looks most toppish on the currency for the time being. And we would see it retracing from 72 at that point of time. But what has happened over the weekend on both US-China and reaction to dollar-China, that is what will, of course, track the dollar INR too. So at this juncture, we have to just go, maybe, of course, it did open slightly higher at 7.17, improved to 7.14. But that is what will depend the volatility for rupee. But otherwise, on its own, rupee is fairly stable. And with this announcement, we might see some flows coming in on the equity side. We do have some flows we are seeing in recent FDI side. So from that perspective, rupee looks more or less, even though its seasonality is there, August, September, October, where we typically see them INR to weaken. But at this juncture, assuming there is no further noise, 72 still looks toppish.
Jayesh, just one quick question then. While the finance minister has announced what she has, does this have any kind of a fiscal implication because of which you could have, the sentiment turn a little bit on the currency and the bond yields?
No, so the bond view definitely is positive now because there was a fear, the whole media was talking about at least 1 lakh crore package and fiscal to be expanded. And even the most conservative economists was talking about let's expand the fiscal, let's go from 3.3 to 4.3. That's what the country needs and stuff like that. So that was a burden. At least with this package, it looks like they're not going to go haywire on fiscal deficit and therefore not extra supply and borrowing. And if there is no extra supply and borrowing, so that's actually more comforting for the bond market. And that's why we saw, if you look at it last 15 days, we saw it moving from 625 to 650, 60 and stuff like that. And now, we'll again gradually move down to maybe 6/4 or so.
The GDP numbers come out on Friday, Jayesh. Do you think that's going to have a material impact?
Sorry?
The GDP numbers for India will come out on Friday. Do you see that having material impact?
Not really on the bond side, right? Because as long as they don't change the fiscal, as long as they don't increase the borrowing, which looks like from their talk, it was more media said, because I think even not only the finance minister, even Mr. Piyush Goyal also said that. So they are conscious about the fiscal deficit. And while of course the economy may need a booster, but that's a different story altogether. But as long as that extra supply is not coming in, it's like, bond market in India is purely demand supply. So you can't really, unless you have government like 2009 RBI willing to monetize it, which is nothing wrong according to me, but that's what the policymakers need to decide.
All right, Jayesh Mehta, we'll leave it at that. Thank you so very much for joining us with a quick take early this morning. So while the currency, we're not gung-ho over what the currency is doing, but the equity markets deserve all the attention.
Yeah, they do, Devina. And Avinash, I wanted to ask this to you. The PSU banking lot, would you go out and buy anything else but an SBI and a BOB? Or would and the moves that we're seeing today, do you think they'll die down? the Allahabad Bank, Central Bank, UCO Bank, etc.?
No, I think except for the large cap banks, Neeraj, where which are pretty well capitalized and where asset quality issues are not as significant, I would believe the smaller banks like Allahabad Bank or a Union Bank or UCO Bank, I would believe that these are typically sentimental kind of upsides which are seeing on the very first day. Sustainability of these banks is difficult considering the fact that capital is going to be a problem. Although the government has promised them capital, the kind of ROI and the kind of asset quality issues these banks have got, possibly one could see the kind of upside being seen today, that could possibly peter off after maybe a couple of days. But clearly I think within the PSU banks, I think stronger candidates would be something like a Bank of Baroda and SBI, where I think you could see definitely good amount of value coming in, and the smaller banks I think clearly would be avoidable. I think it's a sell on rise.
That's the fundamental view. I think even maybe the charts or otherwise, you would probably see the large caps get the larger piece of the action first. You'll probably see the mid caps coming on later on. So I wonder if the prudent action, even from a trade perspective, should be to look at the large cap names for a trade and not necessarily the mid cap and the small cap. And the first bent of retail is to go to small caps. Maybe the idea should be to do the opposite, stick to large caps, even for a trade.
Yeah, but then that takes away from the entire point that you're once again asking, like you're talking about polarization toward, even in the markets are turning around.
But near term,
you're shifting towards not the ones that are lucrative on valuation.
Yeah, so for the investing bit, yes, maybe stick to the mid caps and the small caps, some of them, but maybe from a trade perspective, the larger names. I mean, look at the Nifty 50 names today. They're giving, all of them are giving it the opportunity at the end of 8 minutes, and Brijesh, come in on this, at the end of 8 minutes, you have a bunch of large caps doing really well for themselves. What's the best rate sensitive name to buy? Let me give you 3 names. You tell me which one you like the most, Brijesh. At a price of 288 at State Bank of India, at a price of 16,100 and Eicher Motors, or at a price of 3250 a Bajaj Finance.
Definitely a Bajaj Finance bet, Neeraj, because still I am not more convinced toward Eicher Motor on two-wheelers. I would stick to Bajaj Auto for those. Coming on to the SBI, I think more than SBI, Can Bank placed out to be a very good on charts, considering the momentum it has shown in the Fridays. And the most importantly, if you look at the whole PSU basket, Can Bank shows a very strong volume at the lower levels and bargain buying. Apart from even in the SBI, we haven't seen the big volumes coming at the lower levels, those which I have seen in Can Bank. So I think Can Bank would be the better play in PSU. But out of 3 which you have suggested, I would stick to Bajaj Finance and expecting back to around 3700 levels in maybe 4 to 5 weeks.
Brijesh, if somebody was short in the market, would you believe it should be cut out at these opening levels, or will the markets retrace a bit?
Yes, definitely one should cut out, or in case want to still trailer stop loss or stick to stop loss 11,059 would be a very strong stop loss. In case markets close above those, we have definitely a confirmation of trend change and short-term bottom in place.
All right, we're already off on the pre-open tick at 11,000 now, so just 1.5% higher. So the Bank Nifty is doing swell. That's about 700 odd points higher. We're just minutes away from market opening, and we'll tell you all that you need to know to stay ahead in trade today. The central government has announced a slew of measures to boost economic sentiment. As far as markets are concerned, pre-open indicates a positive start after the withdrawal of the surcharge on capital gains made by foreign portfolio investors.
Public sector banks will be in focus today after the finance minister announced upfront transfer of capital worth 70,000 crore rupees to boost credit growth.
Alchem Laboratories receives Form 483 with 4 observations for its manufacturing facility in the US. On the other hand, Ipca Labs gets 3 observations for its Pipa Sarai unit.
CARE Ratings downgrades Reliance Capital Ratings to CARE BB. Outlook has been revised to stable from credit watch with negative implications.
And lastly, Adani Ports and SEZ's buyback worth about 1960 crore rupees to open on September 6th.
That stock is not doing too badly either. I wonder if somebody would buy it. It's been a long time that we've discussed this. Avinash, any thoughts on Adani Port and Special Economic Zone?
Actually, even the entire group stocks.
Yeah, all of them. Any name out there?
No, I think clearly, given a choice within all the group companies, I think Adani Ports definitely has reported a decent set of numbers for Q1. And on the overall, debt position side, there has been some improvement, at least in the last 1 or 2 quarters. So obviously, clearly, I think if one were to look at Adani Enterprises or Adani Transmission, this is probably the best positioned in the entire pack. And hopefully, even institutional interest is pretty strong. Within the infra space, I would believe that, the kind of operating leverage and the kind of benefits they would gain by, obviously expansion would definitely get reflected in the numbers. I would believe that this could be a stock which could possibly be accumulated over the longer term. I think clearly, despite the fact that this group is speculative, this is one of those group companies which actually has delivered on the numbers, although a lot of improvements can be expected ahead.
Okay. Sorry.
Okay, just one follow-up, Brijesh, on 2 or 3 names that did very well in Friday's session. Would you trade either of them? All of them likely will start off higher today as well. Sterlite Tech, Indian Hotels, Tata Elxsi. Would you trade any of them at the current prices?
I would trade on Indian Hotels because this stock is the one which has managed to gain a good momentum. Even if you look at the previous 3-year support, it has strongly managed to hold 125. So yes, from a trading point of view, I'm expecting 143. But I think 3 months down the line, this stock is forming a good basing formation, and possibly we might see 150, 160 coming on Indian Hotels.
While obviously the overall sentiment seems to be picking up, and in light of that, carrying along with it, counters like Edelweiss, Indiabulls Housing, which up until now have been, slightly more pronounced with regards to the kind of negative news that surrounds it. But whether or not this can actually ride it through is another question. Indiabulls Housing, Edelweiss, Cafe Coffee Day. I mean, these are all names which...
I think my guess is, Indiabulls Housing Finance again continues to remain a very volatile counter. And I think here the bigger trigger, as I earlier mentioned, was the impending merger. I think if this merger goes through, you could see a decent upside again in the near term. As far as Cafe Coffee Day and Edelweiss is concerned, I think again, the headwinds in the near term, they will look to be pretty challenging. I would not be surprised that like Q1, Edelweiss might report a softer quarter. And I think even the management has admitted that, going forward, unless the overall macros improve, we would not be seeing a very strong earnings trajectory, at least in the near term. But yes, longer term at these levels, somebody who enters at these levels could possibly make some money here. Cafe Coffee Day is clearly, I think, a stock which has been beaten down. I would preferably avoid it, considering that, the promoter issues plus the fact that, it's always been a stock which has not been liked by the markets due to its leverage issues.
Well, the last few days, the stock's been doing rather well for itself. Let's wait and watch. Avinash, actually, we'll take in the top call from you post-market open. Stay on, but it's just 55 seconds, so maybe important to get the trade call. We might start at 11,000 if the pre-open rates are to be believed. Brijesh, if you had to bet on one stock as the top trade for today, which one would that be?
I think I would stick with HDFC. We have seen good on the large cap. We have seen good comeback in the last Friday session, and gaining back to 200 days average, which Jayesh has clearly indicated. So I think I stick with HDFC, expecting back to around 2160 in the momentum play, and stop loss can be placed at around 2065, though it's opening around 2100 levels. So 2065 would be the recent stop loss now.
Post-open, we'll also talk about Maruti. That's gained about 200 points from 5,600 all the way to 6,450. Let's wait and watch what happens there. But here's how the markets are starting off, or will start off in the green for sure. The question is, can we sustain in light of the fact that the world is not looking a happy place? No surprises. Whether it was 1% or 2%, wouldn't have been surprised. It could be anything really. About 500 points for the Sensex. It's a big start. The Nifty 50, 142 points. Not a bad start again. Keep in mind that the world is not looking a happy place, so this is not a bad start at all. And the Bank Nifty about 574 odd points, so 27,500. Now maybe cooling a little bit, but let's wait and watch. There will be a few longs which might come to cover the positions in the initial open tick today because of what the world is doing. So you may have a bit of a gyration. Let's wait and watch whether we sustain or no. Mid caps and small cap indices should come up on your screen. The Nifty and the Sensex are up 1%. The mid caps and small caps up about 1.5% to 1.28%. So green across, and the heat map will show you maybe 2 or 3 stocks in the red, or 4 or 5 stocks in the red at best, and then a lot of green. Actually, well, okay, 9 stocks in the red, but not too many losers. Vedanta down about 1.5%. technology and likes of Infosys, for example, and HCL Tech are looking slightly wobbly. Kotak Bank, interestingly, starting off in the red, but those are a few and far in between. Now the red is slowly enveloping and the markets are correcting a little bit as well. Keep that at the back of your mind. What is doing well though? Indiabulls Housing 5%, SBI 3.5%, Yes Bank 3.5%, Bajaj Finance 2.5%. Eicher Motors about 2.5% higher, M&M 2.5%. So autos and financials, both of them have done well. Britannia is about 2.5% in the green, but don't quite see an Axis Bank or the others in the top gainers. ICICI Bank about 2% higher, but IndusInd Bank, Axis Bank, etc. are not quite in the top gainers list. They are lying a bit muted, to be honest. And as I said, Kotak Bank is in the red. A couple of other pockets just very quickly that I want to highlight. So you know what the large caps have done. We are trading about 1% higher for the Nifty and 2% for the Bank Nifty. And those are the set of names that have done well. But the government booster shot for autos, let's see what it is doing to autos and related stocks. So Ashok Leyland up 8%. That's the auto name. Jamna Auto Ancillary up 5%. Shriram Transport Auto Financier up 3%. So good moves there. And some key movers in Friday's session. Let's see how they are faring today. Sterlite Tech, another 2% higher. Indian Hotels, though not quite there, starting absolutely flat. And Tata Elxsi, about 1.5% after the 7% up move that we saw in Friday's trade. Devina, what are you spotting?
The PSU banks are just through the roof, Neeraj, this morning. And the upfront bank recapitalization for about 70,000 odd crores, keeping them buzzing this morning. That's the PSU banking index, which is up almost 4%. Central Bank of India is your top gainer there. That's up about 10 odd percent. IOB is up 8.5%. Allahabad is up 8.5%. UCO Bank, Corporation Bank, Syndicate Bank, all these smaller banks have been very active in trade this morning. Other few names, Edelweiss, we spoke about this one, about 5.5% higher. J&K Bank has also moved up. Then you've got IDBI Bank, which is up about 5 odd percent. The UN Housing Finance moving up in today's session. GVK Power, small name, but okay. Igarshi is up about 5 odd percent. Coffee Day has moved up too. PTC India is up 4.5%. Chola Mandalam, that's moved up too, and a whole host of other gainers there. Vodafone Idea, Escorts, Vodafone Idea is up about, I think, about 6 odd rupees now, after hitting lows of about 5 odd rupees, but very small name now. Lakshmi Vilas Bank too has recovered in today's session, but the breadth is extremely positive. I think 1:5 in favor of the advances. 1,060 stocks have advanced, about 171 stocks which have declined.
Well, what to do on open? Brijesh, quick thoughts. The Nifty or the Nifty Bank, or any stock that stands out for you? Would you stick to HDFC or some other stock looks more attractive?
Yeah, I would stick to HDFC for a stock bet. And even if you look at the Voltas, it's gaining own momentum, giving a fresh breakout of nearly a range of triangles. So I think Voltas is also a good bet. I would suggest it already in the top call of the day. And keeping a target of 644 on the upside is likely on Voltas. On the Nifty, I think, yes, I would take a bet on long at around 10,890, 10,900, which was previous resistance, might now act as a support. Keeping a strict stop loss of 10,855 and looking back to around 11,000 levels on Nifty.
Okay, Avinash, leave us with one stock that you're really convinced about.
No, I think within the housing finance space, we believe LIC Housing Finance is one company which could benefit significantly, not only from the near-term, kind of headwinds like the relief package, but I think in terms of Q1 numbers, the company has posted a decent number in terms of operational income as well as profit after tax. So I would believe here, investors could possibly look at decent kind of upsides over the next 6 to 12 months. Hopefully, credit disbursals and asset quality levels have been very strong, and I would not be surprised that we could see a stronger second half in FY20. So this could be an interesting pick, and it's been beaten down very badly from levels of 650 odd. So I think clearly this could be a good portfolio choice.
Okay, so LIC Housing Finance is your top idea.
Yeah.
Okay, great. Avinash, good having you. Thanks much for taking the time out today and joining us on such an important day. Brijesh, a word on Maruti Suzuki. It's had a good rally already. Is in the green today as well. Would you take profits off the table? Conversely, would you be interested in starting off a fresh long as well?
No, Neeraj, I would slightly avoid this stock at current level, and I would suggest, in case viewers are long, I would suggest to book profits, because if you look at since the breakdown in September 2000, August end of 2018, stock managed to end below 200 average, and since then it has tested 3 times and haven't gone above those leverage. Currently, it's placed at around 6,800, and we are nearly 65, 6,600 over around those levels. And I would suggest book profits around these levels in case it manages manages to cross above 600 level, then definitely can add. But at current point of time, I think profit booking might see in the Maruti and stock might retest around 6180, 6200 levels.
Divina, it's very interesting that we do have the metal names correcting. So they are paying heed to what's happening across the world. If indeed the trade war is center stage, then there's no way that these stocks will do well. And correctly so today, Vedanta, Tata Steel, Hindalco, JSW, all of them are down in the session.
Yeah, and look at the Nifty itself. It's come off. It's at 10,920 now. The pre-open suggested somewhere closer to 11,000. We're just about 0.75%. So this could probably have been any normal day.
Yeah.
It's not necessarily been a day where the markets have digested a big positive announcement from the finance minister, a big boost coming in from the from the FPI desk, but a usual day of trade.
Yeah, just very, very normal. Brijesh, just one quick word. Any metal stock that you would want to trade?
I would go short on Tata Steel because I think stock is clearly underperforming against the whole large caps, and I'm expecting around 290 levels on the downside. So any rise, a good short, stop loss 341.80 can be placed on Tata Steel.
Okay.
All right, we'll let you go on that note, Brijesh. Thank you so very much for joining us this morning. Bringing in Pankaj Murarka, CIO at Renaissance Investment Managers. He's joining us on the show as well. Pankaj, a very good morning to you. Indeed, a good morning.
Yeah, it's a pretty noisy day. A lot of news flows globally.
But it seems to have quietened down considerably, actually. I think the initial euphoria at the start of trade, but now it's stabilized.
Yeah, I think the more important takeaway is government has responded to some of the concerns which investors locally had post the budget.
Yeah.
So clearly gives a signal that the government is responsive and willing to listen to the concerns of the industry and market participants, and I think that is one thing which will be taken very favorably. And having said that, I think some of these measures and related to accelerated depreciation on autos and so on and so forth should probably help a revival in demand as we go into the second half of the year or we enter into the festive season. So hopefully from a domestic economy perspective, I think we should look forward to a better second half versus what it has been so far.
So does your outlook change on PSU banks and autos?
PSU banks, I think the issues are much bigger. It's not just about capital. The issues are bigger, I think, in terms of, improving risk standards in terms of their underwriting and improving the quality of people around in banks and so on and so forth. And the government has initiated a process of consolidation amongst PSU banks, which they need to take it forward. So the issues is not just about capital. There are bigger issues that the government needs to deal with and address before some of these PSU banks or a lot of these PSU banks become investable from an investor's perspective.
So not even the large ones. I mean, you would leave out even the SBI because of, I don't know whether the fundraising bit or otherwise, but that too came off quite materially from the levels that it was trading at. Even this one doesn't look good for
SBI is what we like,
okay.
But apart from that, I think those banks need to go through a significant organizational change and process changes before they become investable, because a lot of these banks now have large balance sheets which are generating significantly suboptimal return on assets.
Yes.
Yeah, and it needs for a significant changes in terms of the way they work or the way they operate. Some of these banks have now are at a scale which is suboptimal with a huge manpower and a cost structure.
Okay.
All of those needs to be addressed.
So I'm guessing leave out all the smaller banks, maybe a couple of large banks and then the others. But the question is, let's assume that you want to go out and buy, and correct me if I'm wrong, but let's assume you want to go out and buy likes of Axis, ICICI or some of the others. Would you stagger out your purchases in a SIP fashion for a stock as well, considering that the world is looking a bit iffy right now?
See, the world is on the brink of a global recession. We need to accept that. It's been the longest expansion US has seen since World War II. We are into the 11th year of this economic expansion. Germany had a contraction last quarter and probably
We'll have another one this
quarter. So by the end of this quarter, Germany would have technically tripped over into a recession. US tripping over into a recession next year looks like a high probability event because their drivers of growth are clearly peaking out, and there's only as much a central bank or even the government can do. Even the government has done what they could have done in terms of sharp tax cuts they brought about last year, which led to a sharp, which gave them extra 100 basis points or 80 basis points of booster of growth, and which gave a significant boost to corporate profits in US. Yeah, but they are now running out of bullets. On the contrary, while the last 3 years or 5 years, the global economy, the advanced economies have done well, Indian economy has actually not done well. We've gone through deep structural reforms. So there's been a divergence between global growth and India's growth. While global growth has been at its peak, India's growth has been at its trough. India's linkage to global growth is not very significant. International trade is just about 15% of India's growth. And there too, our exports have stagnated for 4 years. We have not had any meaningful uptick in our exports. Effectively means that while global growth did well over the last 5 years, India did not benefit out of it. Yeah. So I think the issues around India's growth revival are more domestic and internal. And 85% of India's economy is domestically driven.
Yeah, but what does that do to markets, Pankaj? That's the key thing, right? So all of these points are well taken. But if indeed we have these recessionary moves, will Indian stocks do well? We may fundamentally not be linked and we may fundamentally do well. Will the markets accept that?
So the first point we discussed is the connectedness of real economy between Indian economy and the global economy is very low. Now, when it comes to capital markets, it's all about interconnectedness of financial markets. Even there too, if you look at it, over the last 3 years, barring this year, last 2 years, FIs have been net sellers into Indian markets. Yeah. So the flow of hot money into Indian equities has not really happened. And in fact, over the last 2 years, the inflows from the domestic funds or the domestic investors has been much higher than from the, in fact, to an extent, the domestic investors have offset the outflows that have happened because of foreign institutional investors. So I don't think so. One, it'll have a very significant impact. Global growth will trip over next year. Calendar year 2020 is going to be a challenging year for the global economy. But from India's perspective, that's an opportunity for us to, having done all the hard work to revive and accelerate our growth. And if we can do that, I think foreigners will come back to India in a year where global growth will be challenged because India will be an oasis.
But do you think that, at least the next few quarters are still not going to show any meaningful signs of a turnaround? Because ultimately it's the economy that needs to pick up, while all these factors that we've seen have assisted keeping capital market sentiments up and about. What has it done for the real economy?
You're right. Our economy, let's accept the fact, is in a really bad shape. Last quarter, fourth quarter growth slipped to 5.8%. This quarter,
most likely it will slip lower.
My view is the June quarter will be even lower than the March quarter. Yeah, this is the lowest growth that we've had now in 16 quarters. Obviously, it's a process, so it will take at least 3 to 4 quarters before we can see revival of growth in the economy. But the good thing I'm hopeful is the kind of structural reforms that we've done over the last 3 or 4 years. Now, this time around when the economy recovers, probably our peak growth hopefully should be much higher than the last peak, and probably it should sustain for a much longer time because we've created the capacity in the economy to grow at a much higher rate for a much longer period of time. Yeah, so we'll not hit into bottlenecks as we have always hit in every cycle, and that is what we want, from my economy.
Okay. Basically, we want more stability instead of gyrations to the other extreme.
Yeah. And we want ability to sustain that growth for a much longer period of time.
Durable growth.
Yeah, sustainable growth. The challenge is every time we get to that high growth, zone, we hit into some bottlenecks on the economy, some form or other. Meaning we've had issues with leverage with our banking system, so the banking system has not been functioning properly, or we've had levered corporates, or at times because we get significant amount of inflows from foreigners, we hit into our absorptive capacity in terms of ability to absorb that capital. So we need to enhance absorptive capacity of the economy and so on and so forth. And for all of this, you need deep structural reforms.
Yes, you do.
Yeah, and we've done a lot of them over the last 4 or 5 years.
Let's see if they yield any benefits. By the way, I must say the Nifty 50 and the Sensex have cooled off completely. It's just 0.4% in the green now, the Nifty. The Sensex just about 0.5%. These are levels lower than what the SGX Nifty was indicating as well. The Nifty Bank about 1.43% holding the flag high, but a lot of pressure. In fact, select auto names. Hero MotoCorp, for example, is trading in the red, so keep that at the back of your mind. Pankaj, my final question to you though is on the globally linked sector. Metals, stocks have corrected quite a bit. A lot of conversations floating around about the valuations at which they are trading at. In light of the fact that you mentioned that Germany in a recessionary period, US on the brink of a recession as well, is it prudent to look at valuations in the metal space, or just leave them alone, let the cycle turn, and then even if you buy them 10-15% higher, you'll still be better off? What's a more prudent strategy?
Yeah, obviously the second one. So I think
no, I'm really because you may miss the bus, right, at times.
No,
the valuations are quite compelling.
What you're saying is absolutely right. Metals are a play on global growth. The pricing delta or the change in price has a much significant or larger impact on profits of these companies than the volume growth. Yeah, we are getting into an environment while they might get some volume growth from India because India's growth recovered, but prices might still fall because global their prices are linked to global prices, and global growth is slowing. Meaning my view is if US trips into a recession next year, probably what could come, I would not be surprised if China's growth slips below 6% next year. Yeah, and that might come as a sort of a shock to a lot of these global commodities into the next year. So I think we should one would better off staying away from these names for a while. There are enough more compelling domestic growth stories. Rather focus on them rather than trying to focus on the global growth play.
Yeah, and if demand gets hit, then automatically prices get hit. So you will not see that coming out then.
Well, let's wait and watch what happens. Pankaj, Murarka, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time on such an important day.
Thank you.
Well, the markets have cooled off completely, but well, is there a reset that has happened in that India is now similar to the other markets in terms of the taxation and other issues which may bring it at parity? We'll talk about that and more, and to, finance minister's promises, etc. We speak to Basant Maheshwari to find out if it's the beginning of the long-awaited relief rally or not quite, and the government will release 70,000 crores worth of capital to state-owned banks upfront. We speak to PV Bharti of Corporation Bank to know whether it's enough to boost credit growth.